QuickBooks Pro Desktop 2021, adjusting entry, accounts receivable, sales. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. Let's start off by opening up our reports, going to the reports dropdown, company and financial, going on down to the balance sheet. I'm just going to change the date up top to the cutoff date, 02/28/21, and then we're going to go to the income statement, reports dropdown, company and financial, profit and loss or income statement, dates 01/01/21 to 02/28/21. We talked about last time the general problem here, and we entered the transaction into Excel. So I'll recap it, but I won't go into it in detail. If you want to look at it, the detail of the problem, take a look at the prior presentation. This time, we're going to take that information that we entered into Excel, we're going to put it into the QuickBooks file so we can analyze what would happen here. So if we go back to Excel, just recall that the basic problem would be the invoice. There was a cutoff problem. An invoice was entered after the cutoff date. It was entered sometime in March, cutoff date being 2/28. We had to pull that revenue back into the current time period. Now, if you're doing this in like a worksheet type of problem, it would look like this. This would be the adjusting entry that we would say, okay, now there was inventory involved, so I'm going to have to record in the current time period a debit to accounts receivable, a credit to sales, credit to the sales tax payable, the cost of goods sold going up, and the inventory going down. This is the normal journal entry related to an invoice, which we now want to pull into the current time period so that it's there before the cutoff date. Now, if we need to then enter this into the system, and note that if you're working with like a bookkeeper that does an adjusting entry outside and helps you to create financial statements, we will be reversing this one as we did with the one up top. So one option is if you're going to have the financial statements created from this trial balance is not to enter this one and then not to enter the reversing entry and just move forward in the QuickBooks as you go. And then the accounting department, whoever's doing this that's making the financials, can make them from this trial balance. But if you need to enter it into the QuickBooks system, possibly to help QuickBooks format the trial balance for you, then we would need to enter this into QuickBooks, and we would typically need a reversing entry. So that's where we're sitting at this point. We're going to enter this in. Next time, we'll talk about reversing entries related to it. Now, there's a problem just logistically entering this into QuickBooks as a journal entry because this accounts receivable has a sub-account by customer. The sales tax payable is kind of linked. That account is linked to that little widget that helps us to pay the sales tax, which we don't really want to mess up. So we're a little concerned posting to the sales tax payable account. And then the inventory also has another account that's related to it, being the subledger. So let's think about those kind of problems. I'm gonna open up Excel or QuickBooks, and we'll think about recording this, and we'll do it basically in two sections. I'll try to record these as two different transactions, even though this happens at one time when we record the invoice. So we'll think about it as two different transactions as we enter it into QuickBooks because we have two different, balancing journal entries. Now, we could try to use something other than a journal entry like the registers as we have in the past, but this top one, it's difficult to do that because the accounts receivable has that subledger, and therefore it doesn't work. The ledger doesn't work as well because of that added problem. So I think it's actually easier just to do a journal entry with this one. This one's going past the complexity for us to basically use the ledgers. I would just do a straight journal entry when doing this type of transaction. So I'm going to go back on over and I'm going to say, all right, let's enter a journal entry. So I'm going to go to the company dropdown. One thing before I do that, I might go to the lists and go to the chart of accounts. And I'm looking at that sales tax payable account where we set up the sales tax payable right here. And I might say, hey, look, I don't really want to hit that sales tax payable account because I don't want it to mess up the widget at all. So I might say, okay, I'm going to create another one, sales tax payable, just for the adjusting entry possibly, just so I don't have to hit this one and mess it up. And if I want to make it look nice on the financials, maybe I create both of these sales tax payable accounts as sub-accounts of another account. So let's see what that might look like. So for example, I'm going to adjust the name here slightly. I'm going to say this is going to be edit. I'm going to edit this account. and I'm going to call it sales tax payable, and I'll give it another name so I can make a parent account called sales tax payable. I'm just going to call it sales tax payable 1. I'm going to save that, and then I'm going to make a parent account drop down. I'm going to say new, and I'm going to call it another account. This is an other current liability account, and I'm going to say continue, and I'm going to call this a parent. This is going to be the parent account, which I'll simply call sales tax payable. So I'm not going to make this a subsidiary. I'm going to make the other 2 accounts below it so I can collapse them into the parent. I'm going to say save and close. Then I'm going to make this account a subsidiary of the sales tax payable. Right click, edit that account. And then I'm going to make it a subsidiary of the sales tax payable. All right, and then I'm going to say okay, and then I'm going to make another account which is going to be sales tax payable for the adjusting entry, sales tax payable 2. So I'm going to edit, and then I'm going to call, oh, not edit, I'm going to make a new account. I'm going to hit the drop down, rise up, new account, and I'm going to make this an other current liability, continue, and I'm going to make this the sales tax payable, and I'll say number 2 for the adjusting entries. So I'm going to say save, and then I'm going to make it a subcategory of the sales tax payable again. So I'm going to say edit, and make that a subcategory of the sales tax payable, and save. So now when I generate the reports, I can collapse these 2 under this one sales tax payable. And when I make the adjusting entries, I can avoid hitting this payable, which may be linked to the widget, and instead hit this one so that I can have another account that'll track basically my adjusting and reversing entries. Okay, so doing that, and note you could think about doing the same thing for accounts receivable, but I don't think it's really necessary because we know who the vendor is, so we can work around that one as long as we're careful with it. And so that's where we'll go here. So I'm going to go back on over, and notice on the balance sheet, we have the accounts receivable that needs to tie out. This is the other problem. Let's open one other report. Hit the reports drop down. I'm going to go to the customers and receivable, the customer balance detail, and then I'm going to check out Anderson. Now this is the item that we're concerned with under Anderson on 3/5 after the cutoff date. So Anderson is going to be the customer that I'll use when we hit the accounts receivable account. Okay, so let's do this. We're going to go to the company dropdown. We're going to go to make journal entries. This is going to be an adjusting entry, so it will be as of the cutoff date, which is 02/28/21. And we're just going to copy the format here. So it's going to be accounts receivables, the first one. So accounts receivable. And that is for the 399. So say 399. And in the memo, I'm just going to say adjusting entry. You might want more detail than that, but you at least want that. Now, I'm not going to put a name here. We're going to need the name. But when I do not put the name, QuickBooks will most likely not let me record it. And I just want to show that. So we're going to have to put a name here, but let's not do it yet. And then I'm going to say that the next one is going to be the sales account. So I'm going to say sales, and that's going to be our income account. And that one is for the amount of the 380. So that's going to be a credit of the 380. And again, adjusting entry. I'll put here, and then the last one's going to be the sales tax payable. I'm going to do the one that we just set up, the new sales tax payable, so it'll be like that sub account. And this is going to be adjusting entry, the next item. All right, and now I'm going to try to record that. I'm going to expect that it won't let me to, based on the fact that I have this recording to accounts receivable and no customer related to it. So I'm going to say save and close. It says transaction accounts receivable must include a customer. So QuickBooks is saying, hey, look, I'm not going to allow you to post to accounts receivable because if you do so without a customer, I will not be able to tie out the subledger to the general ledger. I won't be able to tie out the amount on the balance sheet to the customer balance detail, the customer balance summary or detailed report. So we'll say, okay, that makes sense, QuickBooks. Thank you. It's good that you do that because otherwise things get messed up. So I'm going to say the customer is going to be Anderson. And then we should be okay. So now I'm going to say save and close. Okay, and then if I go back to the balance sheet, we have half of it recorded now. So we've got the accounts receivable should be in place. Double clicking on the accounts receivable, we now see that we brought it in here. So there's the $399. We brought it in, so that looks good. So it's included. The other side's going to the profit and loss. So P&L, if we go to the profit and loss under the sales, we have the sales item. That looks good. The 380 looks good. And then we have the other side going to the sales tax. If I go back to the balance sheet, the sales tax is here. And notice I have two accounts. This is the sales tax generated by the computer as we make invoices and then pay them. This is the one we did just for the adjusting entry. And if I wanted to display this report to someone, I could collapse these columns and just show the one sales tax line item. That's why we did that whole subledger thing. Okay, so then let's record the other side of this, which is the cost of goods sold and the inventory. Cost of goods inventory going down, cost of goods sold going up. So now we're going to pull that part in. So let's do an adjusting entry again. I'm going to go to the company financial. We're going to make a journal entry. We're going to do this as of the cutoff date 2/28. The debit's going to be cost of goods sold, and it's going to be for the amount of the cost of the inventory, which is at 304. So we're going to say 304. This is an adjusting entry. The other side's going to go to inventory. Now, once again, I'm going to try to post it to inventory itself. Adjusting entry. And QuickBooks might say, they might give me the same error because they have the same problem. They're going to say, hey, you're posting to this inventory account, and I can't tie it out to the subledger unless you give me a inventory item, because I don't have the item here. So if you let me post this, my account on the balance sheet will no longer match my inventory records. Now, QuickBooks may let me post this, and if it does, I'm going to say, okay, QuickBooks let me post that. That's good, but I need to make sure I reverse it, or else my subledger will not be matching my balance sheet, and that'll be a problem. So I'm going to see if it lets me record it. I'm going to say save, and it does, right? So, okay, so it didn't force me to make a subledger as it did with the accounts receivable. So let's check it out. That's good, but let's check out the potential problem that could happen there. So we're going to say, all right, the inventory went down. Now it's at the 944. That's what should happen. So we decreased the inventory. There's the journal entry, bringing it down to the 944. Now the problem is if I go to the reports drop down and I go to the inventory and I want to look at the inventory valuation summary, I'm now at, let's change the dates to 02/28/21 and pull out the trusty calculator. So trusty calculator. And I'll make it a little smaller here. Trusty calculator. We're at the 1248 is the value, minus on the balance sheet now. We're at the minus the 944. So it's off by, of course, the 304, the amount of the journal entry. So now our subledger for inventory doesn't match. It's not a problem as long as I know that it doesn't match, because I know exactly the invoice that doesn't match. And when I do the reversing entry, it'll reverse out and be okay. But the fact that QuickBooks allows you to post to the inventory account when you are tracking inventory means that you can have this discrepancy. And when you have that discrepancy and don't know what it is, then that's a problem, because you don't have the supporting data for this inventory record. And they won't let you do that. You'll saw with the accounts receivable, because they make you record a customer, and they won't let you do that typically with the accounts payable, at least in QuickBooks. Okay, so then the other side is going to go to the profit and loss. So the profit and loss over here on the cost of goods sold, double clicking the cost of goods sold, there we have the 304 in the cost of goods sold. So it looks good. We pulled everything into the cutoff date, and now we're recording the revenue in the proper period that it was actually earned, even though the invoice went out later. So the bottom line of our profit and loss, $10,381.84, should match if we go on over here to our trial balance, $10,381.84. So that looks good. So we're looking good. It ties out to basically our worksheet here, and we can then see our accounts receivable up top. If we go to the accounts receivable up top, we're now at the 13,872, which matches here. We have the inventory at the 944, which we just saw, inventory at the 944. We've got the sales tax now at the 307. If we match up those two accounts, we're going to say sales tax down here is at the 307. And then on the profit and loss, we have the sales now at the 40,094. Sales at the 40,094, cost of goods sold 31,292. Cost of goods sold is the 31,292. Now the problem, of course, is as of March 5th, it will be in there 2 times. So if I go into any of these accounts and I double click on it, I'm going to say, well, the cost of goods sold is good there, but if I increase this to the 5th, now it's been entered twice. So meaning it's correct as of the cutoff date, great, but as of the date the invoice was entered, which was after the cutoff date, even though it should have been in there before, it's now in there twice. So how are we going to fix that? We're going to do a reversing entry. We're not going to do the reversing entry as you might expect as of 3/5, the date of the invoice, which might be the most proper way to do it because then it would be reversed on the same, on the same day. But we're going to do it on 3/1 because we want all of our reversing entries on the same day. So I don't want to be like hunting around for my reversing entry. I'm not concerned about the 5 days, which it'll be wrong for until we actually have the invoice in, because our goal isn't to be correct for the entire month. Using this process, our goal is to know where the reversing entry is and be correct periodically at the end of the month so that we can basically make our financial statements. So next time we'll think about that. Okay, next time we'll think about reversing it. We'll do it in Excel, do the reversing entry, and then we'll do the reversing entry in QuickBooks here. So here's where we stand at this point in time. Here's the balance sheet. And here is the profit and loss. And then let's open up the chart, the trial balance, going to the banking and taxes trial balance. So if you're checking your numbers, you can check out the trial balance 01/01/21 to 02/28/21. So you can check your numbers here. And there's the trial balance.